Hey traders, this is Ron Haidt at Market Tamer. Happy hump day. Hope you had a great day. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk and specific financial issues should always be addressed with your financial advisor. We'll kick off here with the spiders, the S&P ETF, which I have a long-term bullish position in. The spiders was essentially flat today. It lost 17 cents. In the last couple days, we're not seeing a whole lot of movement. It's the summer. We're getting into Labor Day here in the U.S., which is about 10 days away. It's a perfect time if the market wants to decide to pull back a little bit as they head into the last weekend of summer, if you will. But right now, it's still lower left, upper right since we started breaking out here in July. So S&P still is bullish on the daily charts. We take a look at the Qs, more of the same. The Qs were actually up 70 cents today, and there's still ebbs and flows. Higher lows, higher highs. The Qs also remain bullish. Like I said before, keep an eye on the 50-day SMA on the Qs to see if there's going to be a trend change occurring. For tonight, we're going to take a look at just 4 stocks. We'll keep this video straight and to the point. Alibaba has earnings. Now, according to Thinkorswim, they have earnings on the 23rd. That's tomorrow morning. So technically, tonight was probably the last time you could trade options on it. If I go out 2 years on this stock, this stock has been in a trading range since August of last year. If support is broken around 165-ish, there's a gap fill down in the upper 120s, and then your guess is as good as mine where support could potentially come in because there isn't a lot of rock solid support. This was just a slow rise. If it gaps up and goes back into this recent range, and we'd have to take out 210 for this to be bullish on the longer term charts. So we'll revisit Alibaba and see if we do get that big move. Here's NVDA. NVDA, nice surge today. In fact, I'll get rid of that box. Rose 3.75%, almost $10, but we still have to take out those all-time highs. Right now, they're right around 267 or so. We get above there, that's bullish. This stock continues to remain above its 200-day moving average. And in fact, if you go back to the earnings report last week on the 16th, this so far seems to be a fake-out shakeout. So now we're going right back up. And we've now closed higher than we were right before the earnings report. Here is a stock TNDM, which is Tandem. Back in October, it had a 1 for 10 reverse stock split. But look at what's happened since March and April this year. It's just been on this steady trend of moving higher. It pretty much stays above the red line except that earnings date right there. The upside targets technically, we're into this massive collapse. You can make an argument and say they're nearly double of where the price of the stock currently resides. So if I want to be bullish on this, what I might consider is to use the red line as a trailing stop. As long as we stay above there, see how far it can go. But look at the volume. A lot of big volume confirming the price move, if you will, plus OBV is going up really nicely as well. And last but not least is Urban Outfitters. This is in the retail space. Ever since it broke out right before earnings back in November of last year, stock's been on a pretty decent run, but then since June it's gone nowhere fast. This earnings report, we gapped up and opened right there at 50.39. Got as high as 52.50, so we actually went up $2 more. And the selling came in with massive volume. We closed into the lows of the day. This is bearish engulfing. This is a huge yellow flag if I'm an Urban shareholder. If we get below these lows, which we can pretty much say are around $44, we close below 44. The 200 days the target. Right now it's about 38.39. So this might put a short-term cap on Urban Outfitters. That's it, folks. Wish you guys a great rest of the week. I'll see you in the next video.